Hi, my name is Mark Polton. I'm a buy and hold real estate investor in the greater Charlotte, North Carolina area. Today I want to share thoughts on a conversation I had last week with my brother-in-law. He's an entrepreneur. He's Vietnamese, and stereotypically they own nail salons, quite successful nail salons in Pennsylvania. Both our brothers do, actually. And he has a townhouse which he likes to buy properties, or at least so it seems. And he's asking about what kind of tax savings he can have, or what the tax implications are should he rent out his townhouse. And I kind of broke down, basically how a Schedule E works and depreciation, and it got us into a longer discussion on bookkeeping, deductions, itemizing, and stuff like that. So for his nail salon, he doesn't have a whole lot of bookkeeping. He has a lot of payroll. So, he buys supplies quarterly, and then towels maybe, and then payroll, and that's really utilities. That's really the extent of his bookkeeping. Most of that's done automatically through credit card payments, and all that's done through his merchant account, which I'm sure ties straight into his bank. All that's probably uploaded into his accountant's bookkeeping software. But ours is very different. Our bookkeeping is very labor intensive. It's just a lot of typically small transactions, and they could be anywhere from $2 for a couple fittings up to $1,200 for a whole lot of stuff when we first start out a project. And he also has C corporations for all of his businesses, whereas we have an LLC and everything flows through our tax return. And I was kind of explaining how the real estate professional works and what really the goal of real estate investing is, in my opinion, is to, assuming you have a W-2 job, is to pay $0 in income tax, or as close to it as you possibly can. And it's amazing how that works. Not going to work forever, but at some point we're probably going to start making a lot more money. But also at some point I expect to not have a W-2 job. And income on your Schedule E of your tax return is taxed very, very differently than regular W-2 income is. So it comes down to, I guess, how much are you going to research into the tax code? I'm on Tom Wheelwright, who's Robert Kiyosaki's CPA, and he said the number one reason, and it just came in today into my inbox, he said the number one reason why people pay more taxes than they really ought to is because they're not going to take the time to learn the tax code. They're not going to look at the tax code. Now, I will admit that I'm not very good at looking at the actual statutes of the tax code, but I am pretty decent at looking at the IRS FAQ summaries of particular things. I'm also good at getting on YouTube and figuring out what to search for and not giving up when it comes to, I have an idea of what I want to do accounting-wise or bookkeeping-wise or tax-wise, and not stopping until I find a way to do that. And it's amazing what you'll hear on a podcast or an email newsletter like I did today, or just you may be talking to another business owner and he'll be like, well, I do X, Y, and Z. And I'll give you a good example. So you can pay your children, assuming they do work in your business, up to $12,000 a year, and you get to deduct that as a payroll expense, so it's a write-off, but they don't have to pay any taxes on that. No Social Security, no Medicaid, no income tax or anything. They would only pay it on anything above the $12,000. And this is great. They can start paying for their meals, and they can start paying for movie tickets and vacations and pizzas, the stuff, shoes, cell phone. I mean, they can start doing it on their own. And it's easy for you, so it's advantaged for you because, you get to write down, we have 4 kids, so assuming they all work, that's $48,000 a year. That's a lot of a write-off. And so my brother-in-laws with their nail salons, they can do the same thing. They can pay their children, assuming they're of decent working age and they do work, up to $12,000 a year, and the kids don't have to pay any income tax. So they didn't know that. They're going to start looking into it. But, it's a great idea. School's going to be starting up soon, and, kids are expensive. They're not cheap. So why not have your kids do the work, and then they can they can buy their own stuff. So anyways, it was interesting to see the different dynamics between buy and hold real estate and how it flows in your tax returns, and basically how owning a C Corp doesn't really. For the most part, they pay, they have a salary. I guess they get to take profits, but I don't know how I still don't understand how it's taxed for them. But, their salaries definitely, or hourly wages, however they work it, that's definitely W-2 income, which is the worst income. But on a Schedule E, you get to do what's called a draw. So you get to draw profits off of it. I guess you could do it on a C Corp as well. And I don't know. Anyways, I hope you go out there and live the You Won't Stop Me lifestyle. It's all about three things: knowledge, wisdom, and experience. Once you have those three things, they can never be taken away. Your material items can be taken away. Your assets can be taken away. But once you have that knowledge, wisdom, and experience, you can get them back, and probably a lot quicker than you did the first time. Anyways, I wish you success.